I want to see growth. I love cash flow, but it's not enough for me. I want to see appreciation. I think that's where the real wealth is created. So I need to see infrastructure growth, new freeways, new hospitals, new schools, new businesses moving in. We're getting cash flow, but I really think there's going to be a pop in appreciation as well.
If you're not conscious about your investment strategy, you won't end up where you want to be, not financially or as a human. On this show, we interview highly successful investors and share how they overcame limitations to become unstoppable forces of success. If you're ready to learn what it is to be a conscious investor so you can end up where you want, keep listening.
Welcome back, Conscious Investor. You know, I say this every week. I say, I am blessed. I know the most amazing people, and I get to share space with amazing people that I look up to in the industry of real estate investing. And it is such a blessing. And I've had to actually calm myself down and center myself before hitting record because I am so excited. Kathy Fettke is a woman that I have watched and admired in the real estate investing space for years now. And she's just been a trailblazer. You have probably heard me talk in past mindset episodes about Royal Robbins and his wife, Liz Robbins. And I very much admire Liz. I was able to become acquainted with her personally. And she was a trailblazer for women in the rock climbing space back, when everybody's like the quote, dirtbag hippies. It's beautiful. And so I'm always just grateful for women who blaze the path for other women and do it graciously and just know the zone so well. And so I have no doubt that you are going to gain and grow so substantially through this conversation with Kathy. And we're going to have an intense conversation of fun as always, but we're going to talk about some topics that we haven't touched on for quite a while on the show. And there are also some great opportunities for this, for you as an investor. And we're going to talk about those at the end of this show. So make sure you stay with us to the end of the show. And I have no doubt you're going to just completely gain and grow as we talk about funds and entitlements and just how to invest with savvy and confidence. Kathy, I am elated and thrilled to have you on The Conscious Investor.
Thank you so much. I'm a little teary-eyed. I really appreciate that intro.
I won't lie. I got teary-eyed as I did the intro.
Being a trailblazer means that, in some ways there weren't people ahead of you, or at least that I didn't know. And so I got to learn a lot of lessons along the way that hopefully I could share with others so they don't make the same mistakes.
And you know what? This is what's great is that you do that. You spend so much time speaking, on your podcast and at conferences and events. And so the amount of contribution that you have is so substantial. It surrounds you. So thank you so much for that.
Thank you.
Well, let's give the conscious investor may not actually be familiar with you. So why don't we just start with just a brief, hey, Kathy, who are you?
Well, I am the founder of RealWealth. It's we're up to over 70,000 members now. We've been helping, it really started, I'm from California, and it's hard to invest locally if you're looking for buy and hold real estate. So I had to become an expert on investing, not where I live, out of state, before that was a thing, before people knew how to do it, before there was really that much access to internet, if you can imagine. So I've learned there weren't great property managers. I mean, property management's still difficult. So we were building our portfolio, and in the process, my background's in broadcasting, so I had a radio show in San Francisco. So everything I would do, I would kind of talk about on the show. And then my listeners would be like, I can't buy real estate locally. I want to do what you're doing. So I would refer them to my teams that I had set up in, say, Dallas or in Florida. And then I thought, well, gosh, this could become a business. I'm a licensed real estate agent. So that's what we do still today at RealWealth. We help people build their real estate portfolios, kind of hand holding them through the process. And we have teams and resources in different cities that are still growing, yet cash flow.
The beautiful word, cash flow. Conscious investor. I know that's a word you like as well. There are lots of reasons to invest. And, especially right now, a lot of people are really saying, where's the cash flow? Yes, speaking our language. I love this. And I love how there's a solution. And oftentimes people will become just stuck and have that stuck mindset and just be like, well, I just can't, oh, they can, but I can't because, and they give what I call reasonable excuses. Like, okay, it's reasonable that you can't buy something in the San Francisco Bay Area. I mean, it gets exorbitant over there, right? But that doesn't have to be your end all. In fact, Kathy, just briefly, like I'm up in North Idaho in a one stoplight town, soon to be two. Yeah. Oh, it's getting exciting, you guys. but that wasn't, I didn't allow that to be an excuse for me either. And I agree with you. Live where you want to live and then invest where it makes sense.
Yeah, and the only reason someone would feel stuck, it's really simple. There's only one reason, and it's lack of knowledge. And that's solvable, right? It's lack of knowledge and also lack of experience. So, one step at a time, you just have to learn one thing every day, and before you'll know it, you'll be a savvy investor.
Oh, it doesn't take long at all. I love that advice. Now, I know our time's going to fly by, and I don't want to miss a moment to dive into some of the projects that you're working on. And we have had previous guests, but it's been probably 2 years since we actually dove into funds and structures. And I know that I think that we might be on the same page that there are a lot of people that are launching funds right now, and it's really not the best idea.
Yeah,
So
I travel a lot. I'm at a lot of conferences speaking and mentoring, and I'll have people come up to me and say, hey, I want to be a syndicator. I want to raise money. And I say, great. How much real estate experience do you have? What do you own? Oh, nothing. I'm just starting. So I'll usually look at them and say, you're not qualified to invest for other people if you haven't done it for yourself yet. Don't do it. The problem is, when I started, I was one of the first syndicators, and I had to figure it out. Hire a very expensive attorney in San Francisco to help me through the process. But I already was an investor. So, I then over time, a lot of syndicate, trainings, masterminds and stuff came up where people pay a bunch of money to learn how to basically buy real estate with no money or with OPM, other people's money. But boy, are you at risk. Yeah. So I can kind of talk about some of the things to look for in a syndicator, if that would be helpful.
sure, let's talk about that. And then, yes, let's go there first. And then I definitely have a list of questions for you. So let me hold back and say, run with it, Kathy.
Okay, well, and for those who don't really know what a syndication is, that is a group investment, meaning that is totally passive. If you're going to own investment property on your own, you have to get the loan, you have to find the property, you got to asset management in a fund or a syndication. Somebody else does that for you, and you just give them your money and you're passive. So that means you don't have control. And there's pros and cons to that, right? So the key word I want to say is, if you're going to be handing someone your money, you want to make sure they can manage it better than you. And you want to make sure they can manage it, right? So they should have experience, and they should have experience doing exactly that thing. So the mistakes I've made over the years are maybe working with a developer, he's going to buy this piece of land, and we're going to develop something fabulous. And he's done it before, but he hasn't done that specific thing. I'll give an example, a wine village. This was a fabulous idea. Who doesn't want to own a wine village?
Sign me up.
But I did a syndication with someone doing this, and my mistake was he hadn't done that. He'd built other commercial things and buildings, but this was very specific. It turns out that banks don't really know how to lend to something like that, even though it's just commercial. Wineries are just renting your space for tasting rooms, but we couldn't get the financing. And so make sure that the person has a track record and in that very thing that you're investing in. Okay. That's really all you need to know. If they have a really strong track record and they're running the show, like a lot of times a new syndicator will say, oh yeah, so-and-so is on board, but you need to find out how much is that expert actually involved. Are they just using that name? Who's really doing the hands-on management? That's what matters.
I love that last part. I remember on my very first syndication years ago, what an investor asking me, Do you actually have voting rights? And what percentage of voting rights do you have? And is your voice actually heard at the table? And it's a important, critical point of conversation, because
Yeah.
if you're trusting someone with your capital, your hard-earned money, and they have no power over it and how it's being, um, not manipulated in a bad way, but how it's being utilized is a better word, in
Mhm.
that investment process. Like, you could be up the creek.
Yeah, and there's a reason there's limited control is you can't have a bunch of people with opinions. There has to be one
Yes.
person making those decisions. And so that would lead us to step number 2 is that the business plan needs to be super clear. This is what we're buying. This is our buy box. This is where we're buying it. This is how much we're spending on these different things. Here's the fees. All of that needs to be spelled out. If it's vague at all, you don't have a case. You don't have anything to vote on, right? I am also someone who can say I fell into that trap where I didn't mind not having voting rights, but then where I made the mistake is there was too much vagueness on the business plan. What he said he was going to build and what I thought he was going to build, he didn't, and our money went somewhere else. But the documents weren't super clear, so there was nothing I could do, and we're just along for the ride with this guy. Like,
Did it
whatever.
turn out? Did it turn out all right
Um,
in that case?
so it's not over yet, and it's
Okay.
it's in Costa Rica, another thing, like,
Yeah.
don't complicate things. Don't follow the sexy stuff. Just do what's been done over and over again. I was doing wine villages and retreat centers in Costa Rica and stuff like that. So it's harder to do something different. But it is a very cool retreat center. We haven't got our return of capital yet, but I think we will. The value of the land has gone up, but I am helpless. If we had really clearly defined that, you have to follow these things, we would have a lawsuit. We would have grounds for a lawsuit because say, hey, you didn't follow the business plan. But because
Yeah.
it was so vague, we're just again along for the ride.
Along for the ride. It's going to be so much fun. Hey,
Yeah.
I want to put a bookmark here and just ask, what has that been like investing overseas? Because listen, I know the conscious investor heard Costa Rica and put 2 and 2 together. That's not, continental US. So
Yeah.
like,
It's hard. It's hard. There's different rules, different laws. You need to have an attorney from wherever you're investing to make sure to read the legal documents if you can't, if you don't know the rules of that place. With that said, my daughter has started a company called Gateway Investors, and she's selling international real estate and taking people on tours and having them meet with the attorneys and so forth. So lots of people invest internationally, and it's
very much so.
wise to diversify. I think you just need to make sure if you don't know the local rules, get someone who does.
Yes. Oh, I love that. I have a friend developing in Bali right now. So
Okay.
yeah, it's a thing. I mean, people have been doing this, and it's not new. People have been doing this for years. It's
Yeah.
just, asset classes and different opportunities kind of become the it factor for a little hot second. So
Yeah.
yeah. Okay. So we're saying when we're looking at syndications, we're going to make sure that we've got a clear business plan. We know they have a track record. We know they have a clear business plan. You ready to hit play and green light the deal now and wire the money?
Well, I think so. Just also understanding the fees, and sometimes it'll say, let me give you an example again. I could give
I
you a
love
million examples of what I've done
You're like,
wrong
let me
over the
tell
years.
you, ask me how I know.
But I remember looking at the financial reports of this one deal I did with a very good, all the things, great developer, track record, and so forth. But I'm like, what's this expense? This seems very high. It turns out it was for his private jet. And like,
Of
okay, we're
course.
like paying monthly fees for the private jet. And I challenged it, and then I looked back at the documents, and it wasn't clear of exactly what overhead means. So that as vague as that, I mean, as like simple as that sounds, you got to really define, like, are we paying your office expenses, your staff? Like, what does this mean? What expenses are we covering? And it didn't even occur to me that it might be someone's private jet, which, he explained, hey, I got to fly to the site. It's going to be cheaper for me to take my own jet. Well, maybe, I don't know, whatever. It was like,
Right.
so really understand the details, ask more questions. And then, finally, continuity. This is important. If there's just one person in charge of it, what happens if they get hit by a bus and God, help them?
Yes.
They don't. But what happens if something happens to that person. So you need to see in the documents if they, become mentally challenged somehow, or
Yes.
incapacitated, or they die, who takes on the project. So understanding that continuity plan is really important as well.
And I will say it does really happen. Ask me how I know. We unfortunately lost one of our, partners, as we're in a development project, and our past partner,
Yeah,
you know,
it
got
happens.
very ill very suddenly with a brain tumor, and it happened very, very quickly. And so having that it is a legit, things happen, life happens, and that is really important. And I think it doesn't happen that often, and so it's easy to dismiss it and say, oh, that's okay. But no, it does happen. It's better just to
Yeah.
make sure it's all buttoned up, neat and tidy, for
Especially
sure.
since the people you might be investing with have more experience, have a track record, so they might be older, right?
Right. Yeah, a very high possibility. I
Yeah.
love that. This has been such a great recap for the conscious investor, just on is as many of you are still figuring this out and you're trying to figure out what your next step is going to be. And so, that kind of feeds you in that capacity. I'm so curious if we can dive into your fund and fund structures and how you decided to start a fund, why, the purpose, and what to look for in a fund. And I know I just threw a dozen questions at you, but I also know you're very experienced and you can handle this.
Oh, yeah. Well, I've been syndicating for 14 years, and it started in 2009. If you can, what a time to invest,
That was
Um,
a great time to get in.
It was a great time. That was a time when suddenly, banks were failing left and right. Developers could walk right into a bank before that and get whatever money they needed, or from, anywhere. And then suddenly in 2009, they couldn't get money anywhere. So then I became the most popular girl in town because when a developer who listened to the Real Wealth Show podcast that I've been doing, called and said, hey, can you raise money? I've got a deal. It's $3 million for 27 waterfront townhomes in Portland that went to the bank. It's worth 20 million. We can get it for 3 million. He's like, can you raise 3 million? I'm like, I don't know. So I sent out an email to my list and like, hey, anybody interested? And I think I raised the 3 million in like 5 minutes. But then a very kind person called me and said, I love what you're doing, but it's illegal. There's a process for raising money and you're not doing it right. You can, at the time, it's like you could only tell friends and family. It had to be like, have a track record with these people. So I quickly took back what I said, went to an attorney, got it all done properly. But that was kind of the beginning of syndicating. And I came in at a time when we were buying stuff for so cheap. I mean,
Oh,
it was
yeah.
crazy, 10 cents on the dollar on a lot of these projects. So that's kind of how I got started. And then it really slowed down before COVID. We just were having a hard time finding deals. Land prices went up so much. There was so much competition. So we took a little break, kind of watching this frenzy of new syndicators coming in and paying far too much for everything. And now, then as soon as, I guess it was 2022, when the Fed said they were going to start slowing down the economy by raising rates, then I was like, "Ooh, it's my time," because I don't follow the masses. I don't want to follow the masses. I don't want to compete. I want to be the only one, getting the deal. So it was like, as soon as I knew that rates were going up, I knew it was my time to get back into the market because there'd be so much fear. And sure enough, by the time we got the fund together, I decided to focus on residential 1 to 4 unit real estate, because I think the commercial real estate industry still has some working out to do. They haven't found their bottom yet. Whereas with residential, it was immediate. So we decided to just start a single family rental fund. And I have, as I said, I've got partners all over the country that I've been working with for 10 years that we've been, working with them to help individual investors build their portfolios. So I thought, let's do a fund. And sure enough, we are, in most cases, the only one at the negotiating table. We have wholesalers calling us, lowering prices where it used to be like, they play hardball. Now we're getting ridiculous deals, but in areas where there's growth. For example, North Texas, in this little town called Sherman, Texas, where it's becoming a new hub for chip manufacturing. So big salary jobs coming in, but we're buying properties for 100 grand, and fixing them up, making them lovely, and getting really good cash flow in a growth area. So, and with, I'm telling you, like, no competition, because in a fund, we're raising capital, we have cash, so we don't need to worry about rates. We're just buying and renovating, getting great deals. And when rates come down, which I think they will next year, then we'll refi and take that money and go buy some more. But in the meantime, we don't care about rates. All we care about is that there's not competition right now.
You're your own bank right now.
Mm-hmm.
And then it's almost like an elongated Burr method in a sense. Like,
it is.
Okay, well, we'll just refinance this when the rates, stabilize and get to our liking. Until then, we're good to go.
And either make distributions or reinvest. But I think the investors want us to reinvest because it's such a high growth area. I want to see growth. I'm not I love cash flow, but it's not enough for me. I want to see appreciation. I think that's where the real wealth is created. So I need to see infrastructure growth, new freeways, new hospitals, new schools, new businesses moving in. And that's what's happening in this area. So we're getting cash flow, but I really think there's going to be a pop in appreciation as well.
Okay, no, I know the conscious investor is saying, okay, but how did you find this little tiny needle in the haystack town, right? I have the luxury of talking to so many, younger investors, and they're like, how do you discover the markets? Like, and they're kind of going for the cities that are, we recognize their name recognition and such, but there's so much opportunity in these yet to be really discovered places. So I can hear them saying, how did you discover that?
It's a little bit easy for me because I've been doing it for 20 years and I have teams all across the country and they tell me. So I just rely on our teams, our boots on the street. But just follow where jobs are going, follow where big businesses are going. In this case, it's not really a secret. The Biden administration passed the CHIPS Act, basically bringing, reshoring chip manufacturing to the US. All you have to do is see who they're giving this money to and where those companies are relocating. So it's not too hard to figure out. That in that case, it's headline news. There's a few hubs where these companies are going. They need to be near water, and they need lots of land. So Texas, Texas actually has a lot of water and lots of land. So that just kind of made sense. But I would say in the beginning and even now, my greatest resource is property managers, because they know who's, and again, I'm just talking residential real estate, but it would be true for any real estate. They know who's calling, right? So when I would vet an area, when I first went to Dallas, and this was 20 years ago, Dallas was like, people were like, why would you go to Dallas? Nothing happens there. But I could see what was happening there. I could see that jobs were moving. So I would just go meet with like 10 property managers and say, who's calling? Where are they working? Where do they want to live? And this is my clue. And a real estate agent isn't necessarily going to know that.
I agree I completely agree with that on the real estate agent side of things. And what a great phone call to make. So when we think about the fund, what is the structure like for your fund? And if we compare that with what are investors looking at when they look at a fund, in addition to, hey, you've got a track record, we have a clear business plan, everything's lined out in detail. What are we looking for in a fund? Anything different? And then what is your structure like?
Yeah. So a syndication is usually, let's say somebody finds an apartment building and they identify the apartment building. It's one asset and people can do their due diligence on it. They can read everything. They've already identified the property. A fund, generally you haven't. So what's really with a fund, it's like, hey, we're going to raise this much money and we're going to do this. Where things get a little murky, and I've met a few people that have funds like this, is they just just invest in anything, whether that might be technology. And when people tell me this, I'm like, oh, that sounds just incredibly difficult to manage. They want to invest in small businesses and tech, and then also real estate. And it's this fund that does a whole bunch of things. How could you possibly research this? Now, if this is a fund manager who's had a great track record and success, fine. But if it's somebody doing it for the first time, just be careful. In our fund, we made it super clear. This is our buy box. We are buying homes between $100,000 and $200,000. They need to rent it by the time we've renovated. At the 1% level, they need to be this much distance from all these new job centers. Like super clear buy box. So people, even though they couldn't do the due diligence on the actual properties because we hadn't bought them yet, they knew that we would be following this guideline. That's number one. So that's the difference between a fund is you don't necessarily know what you're getting. So make sure you know what the manager is planning to do. And be cautious. It's really important to be cautious if they're too vague again. Then from there, you got to figure out who gets paid and when, what's the waterfall, when do you get your money? And this is just kind of interesting. Even with syndicators, they didn't know how to answer this question. When people come to me, I'd be like, well, how much are you going to make on it? And they'd be like, oh, I hadn't thought about that. So it's, why are you doing it? So make sure you really understand the flow of money, because this is at the end of the day where the lawsuits happen if that's not clear.
Yes.
So it should say, first funds go to this, or in our case, if we buy a property, fix it, and we decide it's better to sell it in the first 2 years, we're going to reinvest that money. But after 2 years, that gets distributed. So these things are super clear. With the cash flow of the property, it's 70-30, 70 to the investors, 30 to us, just a straight split. Just make sure you understand if there's financing, is that allowed and how much and what does it look like and what are the terms? Just know the numbers, because of course lenders always get priority. So if there's going to be a lender coming in and taking priority to your money, you better know what those terms are, right? So, or if the project relies on financing, like I said, with the Shasta Wine Village, is there a bank that's underwritten this, and that's okay moving forward, and let me see the documentation on that. So with a fund, you might see a preferred return, and a lot of people get very confused about what that is.
Yes.
A preferred return just basically means that you have priority in the flow of money. So, and that's usually from profits. So in the flow of money, it's usually lender comes first. They're usually secured. They get their money first. And then once it's profits, the preferred gets their portion first. So if it's in our current Oklahoma fund, we just started a second one, is a 6% preferred return, which means before I get my profit split, the investor gets their 6%. Once they get their 6% annualized, then the profit split starts. So again, all just really like map it out, go over it with your CPA, make sure you understand it, make sure that you're not going to be taxed so that there's really no return. So talk to an expert, make sure you understand that flow of money. That if you're putting a lot of money in, talk to an attorney, talk to your CPA. I've met people who put $1 million into a deal and didn't do that, and they lost it.
Wow.
And these syndications that are kind of going bad, if you're putting 50 grand in, spend a few $1,000s to have an attorney review it, right?
Oh, I cannot agree with you more. It's so important. And I love, preferred returns are absolutely great. It's interesting. We're still offering preferred returns, but I'm noticing such a shift in the space of some people just completely omitting it and deleting
And
it.
we in our fund, this is the first time I haven't done a preferred, but my partner, that's how she wanted it. She just was like, I want the investors to take the risk with me. She's doing a lot of work. She is buying these properties at massive discounts, renovating them at massive discounts. And she's like, I want my share of that. And I don't want, they're going to just have to take the risk with me. So we're like, okay. And it was no problem because people trust her so much. We have 13 years track record with her. So they're like, that's fine. That's fine. We get to be in on these deals that we couldn't be in on otherwise. But normally I do a pref because that's basically like, hey, investors get priority before the managers get their share.
I do like that she recognizes. So often people don't recognize the value that they're bringing to the table. And this is more often comes about with women than men. I've noticed is that, there's a diminishing of, it's okay, I can wait, or, and so
Oh yeah.
that's impressive. And I just love that internal strength that she had to advocate for herself and say, no, I'm worth this. And I know what I'm putting into this. And this is how it needs to go down.
Oh my gosh, my first syndications, I was so over the top what you just said. I would go to the investors and say, I'm not even charging fees. I just want you to get your money first. 15% preferred return goes to you first before I get anything, no fees. I had a business consultant come in and go, how are you supposed to run a business that way? Anyway, so I get it. You got to keep the lights on, right? There do need to be fees. There's a lot of
And
work involved.
when there's so much work going in, there's also the enjoyment of life. Like,
yeah.
Why do people work so hard? Like, yes, you want to contribute and, serve people powerfully, but we're a person also. And it's lovely to be able to say, like, okay, let's just go kick back and, take that trip and relax and whatever it is. That is so great. I know that you have another project also, right? An
Yeah.
entitlement. Do you mind talking about that, sharing?
Oh, not at all. Yeah. So the developer that came to me those many years ago in 2009 with that Portland deal, we ended up doing just a ton of deals together. Just, oh my gosh, we got land in Tampa for $16 million. It had been $160 million. It's, 4,500 lots. We're still selling them. I mean, the return is phenomenal on that one. So we've just kind of worked together since then. Like I said, we took a break when prices got too high and we weren't seeing the margins. But now this is his market. He's like back in business. He loves distress, right? That's where you get.
Yes. This is when you make money.
So he's like, I'm coming back out of retirement again. So, in the commercial industry with rates having gone up so much, there is distress. He's a master negotiator. So in one case, we're buying land from somebody who was able to, he was not an experienced developer, but bought this really quality land up in Oregon on a lake, Klamath Falls Lake, and couldn't get it off the ground. But he did all the initial, the roads and the infrastructure, and that stuff is expensive.
It's so expensive.
So my partner comes in and he can't finish it and he's stuck. So we came in and we're doing a lease option. We've done this a few times where we don't even have to buy the land. We're not developing it. It's already done. All we have to do is build houses. And we're just doing an option where we don't ever pay for the land. It just happens right at the sale. When the end buyer comes. And we negotiate $60,000 per lot when they're about $100,000 to $120,000 per lot. So we're just going to make it's going to be a really great deal on those, and such a desirable thing. I mean, who doesn't want to live near a lake? And we've got so many people looking for more nature type environment. So that's exciting. Then we've got an entitlement deal also with him where a farmer is in distress. Again, anyone on commercial loans is in pain right now if they're unadjustable, because their payments have doubled, if not worse. So we are, same thing, lease option on farmland in San Ramon, Danville area, right outside. Very high end, high end area. And we are just entitling it, meaning changing the zoning from farmland to residential. And this is, again, what my partner specializes in. So we don't even have to build those homes. All we're doing is working with the city to change the zoning. And then we already have an end builder who's going to buy the finished lots from us. And that's entitlement deals are pretty lucrative. So we're working on that too.
That is so powerful. Okay. So conscious investor, you're listening and you're like, wait, I want to join in on this. This sounds amazing. So how would a conscious investor come and join in any of these amazing opportunities, Kathy?
Yeah. Well, RealWealth.com is my main website. And when you go there, you'll kind of notice it's mainly the referral business I was talking about, helping people build their own portfolios. But when you go through the questionnaire, it will ask you if you're interested in funds. And if you say yes, then it'll take you to our website, which you can also go to directly, growdevelopments.com. That's where you find the funds and syndications.
So conscious investor, it's always good. And you've been listening to the show long enough. You know that I don't endorse every single person in this capacity. Very rarely do I say, this is worth your while to go and check out if it's something that's interested. Kathy's been experienced. I've been following her for such a long time. I can feel confident in saying, you need to do your own due diligence. That's your responsibility. But I don't mind saying, Kathy, let's point them in a direction so that they can go and find your deals. so take that, conscious investor, as just like, just a little, okay, maybe I want to do that. Now, something that piqued my interest is not that's in a totally different, segue here is retreats. You offer retreats. And I'm embarrassed. I didn't know this. And I love that you offered. I was even going to ask you, just at the end here about, you and Rich, you've been together, and what's that been like? My husband and I, it's been fun to evolve together in our investing and such. So I was just wondering if you wouldn't mind sharing about your retreats, about, marriage life and investing and such.
Yeah, of course. Probably, 5 years ago or so, we live in Malibu, and I would drive by this piece of land pretty regularly. And one day a for sale sign went up, and I was like, oh man, if it's meant to be, it's meant to be. And at the end of the day, we called, and it was far too expensive. But I was like, you know what? That's great. It's going to be on the market too long. They overpriced it, and then they're going to lower it, and we're going to get it. Anyway, that happened. After 6 months, they lowered the price. We bought the land, and I knew it was going to be for retreats. It's just a beautiful healing property. So we moved onto it. We live here. I have 2 Airbnbs on it. So it's kind of perfect when I'm not doing it for, short-term rental on the guest house and the tiny house. Then we just turn it into a retreat center. And then the house across the street can be rented as well. We keep it really small, like 10 to 15 people. And
So nice.
Just get much more personal. I go to so many conferences, and I love them, but you're just meeting so many people. It's hard to go deeper. It's hard to really get personal. And so that's what we do, like every quarter. In January, we have a new year sort of planning, really getting yourself set for the year and the next 5 and even 10 years, having that vision super clear. That's in January. In April, we do a couples retreat, and that's like reuniting, but also getting on the same page. It's usually opposites attract. And in the beginning, that's what attracts you. But then shortly after, it drives you crazy. So it's like, how do we use this oppositeness to further both of us? Like what, you're the yin, I'm the yang, how are we here to serve each other to grow? And we've really loved doing those couples retreats. They've been phenomenal. We've seen people who didn't even realize they were able to retire now because they hadn't stopped to look at their finances and get on the same page and decide what do they really want.
Wow.
And how do they want to spend their life together. And they were in their late 60s, and we're still working their butts off, and they're super wealthy. So anyway, it's like just getting on the same page and having some time, romance, just going deeper. And then I do a women's retreat because I think it's just different when a group of super powerful women are together, 12 women, and sharing struggles, but also how to break through that glass ceiling even further. I think most of us have, but there's more to go. So I love helping women get on stages and get out there, get the voice out there.
It's so important. I see that I've come to this point where there isn't the glass ceiling, there isn't a blue atmosphere. It's just like the breakthrough through into just this explorable black galaxy. And it's just so exciting. I'm like, oh my gosh, what planet will we discover today, or what galaxy?
That's right.
When we get to that point, it's just the opportunities are so endless. And so, conscious investor, if you're, a high performing woman and you're ambitious and you're looking for this, you might be like me where you're like, I see the black galaxy. It's still, it doesn't matter. There's always a threshold, right? And sometimes we can't see what we can't see. So, and for couples, my husband and I just went to we were the only couple, and it wasn't intended for couples, but he and I went to a mastermind retreat that was intimate like that. There were 12 of us, and it's just so special. But we both agree. We're like, that was better than any marriage conference that we went to. Like when you can be as a couple with a smaller group of people. And so I would have to say, I'm like, oh, your couples retreat sounds very enticing. Like,
it's really powerful. And like, we get like incredible caterers, like gourmet food. There's hikes and beach walks. And so there's a lot of romance as well. But, there's some fun things that we've learned. Rich and I have been working together our whole marriage. We've been married 26 years. And, there's challenges that come with that. So we have a lot to share on how you can work together and stay in love, how you carve that out, that time to stay in love, have fun together, and be on the same page, have things you're looking forward to. Otherwise, it's just a partner. You're just working together.
Yes. Oh, I love that. I do have to ask, in Conscious Investor, you've heard me talk about Gottman's book, The 7 Principles of Highly Effective Marriages or something. But he talks so much about this, and we found it like such an informative, probably the best marriage book, the only marriage book we've actually read together. And it was just offered a lot of insight into each other. So got to throw that out there because he talks about that. You can live those parallel lives and just creating the love map so that you're constantly in connection with each other. It's so important. It's like you said, what's the point?
One tip I'll just give you really quick that will be a game changer is having your date nights be date nights only. Absolutely no talk of anything negative. Like this is not the time to work stuff out. It's the time to have fun together. Go do something fun together. It doesn't have to be dinner. Go bowling, whatever. Just remember to date each other and do not talk business or household stuff, children, nothing. Be kids and have fun. And hopefully that ends up in romance at the end of the night. The mistake people make is they combine it all. And then by the end of the night, they're mad, because they're talking about business or something. So carve out weekly or biweekly or monthly, a business meeting together. We do it weekly to go through all those items so that date night, that doesn't come up. It's already been dealt with and it's just love and fun. So that can be a game changer right there.
I love that. I love that so much. I've personally sabotaged many dates over the last 2
We
decades.
all have, right?
Like, oh yeah, bringing up the kids or the business deal or whatever. Yeah.
Disagreements or whatever. Just be on a date. Like you wouldn't do that on a date.
And fun is so underrated. I don't think that we value fun. I think we put fun as something that has to be earned and like, oh, I can have fun when, instead of saying, I get to enjoy all of my life and I can highs and lows, and we can enjoy this date night, whatever that looks like.
Yes.
I love it. Kathy, this has just been absolutely just a joy, sharing space with you. And I love your insights, just serving investors really of every different level that are listening right now, and just giving them some different vehicles and ways to look at investing, to consider, what am I going to look at in my syndicator? What am I going to look at if I want to go into a fund model? And I love the focus on details. It's so important. But to tie it up at the end and to talk about, just the most important, why do we do all of this? Well, it's for the people in our lives, people we hold close to and dear to our hearts. So thank you so, so much, Kathy.
Thank you.
And Conscious Investor, thank you so much for listening. I appreciate you so much. I appreciate the many of you who've been listening for the last 4 years, and just the generous reviews that you've left, the emails that you've sent, just letting me know that this podcast is encouraging you. So if this is encouraging you, if you've gained something, please make sure that you do leave a review and let me know. I read every single one of those reviews, and you have no idea how much they fill my heart and just bring so much joy to my heart, knowing that it's helping and supporting you in pursuing the life that you want to create, because we're the architects of our lives, and if we dream it, we can make it happen. And it's not just a dream that's supposed to be on a shelf. You have that dream for a reason. And these episodes with Kathy, the mindset episodes, they're all here to support you with that. And if you're a first-time listener, thanks so much for stopping by and listening. Please take a moment, hit the subscribe button so you don't miss another episode. Until next time, live big, love bigger, and do great things.